Welcome to ShortView Trading. This is your morning market hit for Friday, 7th of May. What matters today for traders? Well, at the start of the week, we were talking about how markets had lost their energy. They'd begun trending sideways despite strong earnings. Earnings this week have remained strong. As you can see on your screen now, we've had 436 of the S&P 500 companies reporting. On average, they've grown earnings by almost 50% year on year, and those earnings reports have surprised to the upside by about 23% on average. But despite those earnings results, which have remained strong this week, the theme we laid out on Monday has evolved somewhat, with equities coming under pressure, particularly in the tech and tech-heavy parts of the US equity market. You can see that, for example, in the NASDAQ 100, it chopped sideways in the second half of April, and in the past few trading days, it's rolled over, moving quite sharply lower this Tuesday, still though above its 50-day moving average. Interestingly, therefore, tech has not been supported by lower bond yields this time. You can see the 10-year yield moving lower, below its 50-day moving average. Normally, that's consistent with strength in tech, but not in this past week. Equally, while tech has come under pressure, the cyclical parts of the equity market have been pretty strong. Have a look at the S&P 500 banks, for example, a classic cyclically sensitive part of the market. They've rallied sharply in this past week, which again is unusual when bond yields are moving lower, as this chart shows. So where does that leave us? How should we think about that breakdown in correlation, and what does it mean for markets? Well, we address all of that in our daily trading publication. It's available on the website to subscribers. We also offer a free trial for 7 trading days, and in that publication we make a 1 to 2 week trading recommendation, long or short, on US equity futures, and really the view is driven by the signals we get from our short-term trading models, like this one you see on your screen now. This is our short-term risk appetite scoring system. It measures the ebb and flow of fear and greed in markets, and with weakness in certain asset prices this past week, it's moved lower back towards buy levels. You can see it's generated pretty timely signals in recent months. Other models have also moved back to buy, like this one. It's a 3-day put to call ratio, suggesting that there's now a reasonable degree of downside put protection in portfolios. So how we trade in this market? Well, click the link below, have a look at the daily RAG trading publication. And what are we watching today? Well, in terms of data, the main event is non-farm payrolls out of the US, 1:30 London time for April. That'll be watched closely. We also get consumer credit for March out at 8 p.m. London time. We have some speeches today. Lagarde speaking on the global economy at 11 a.m. We also get speeches from the Bank of England's Broadbent and Haldane. That was your morning market hit for Friday. Do follow us on YouTube, search under ShortView Trading. Join us on Twitter, LinkedIn, and or Facebook. Thanks for listening.